Great. Good morning, everybody. Firstly, I want to thank Wharton for inviting me to participate at this prestigious event and to be a moderator on this panel, which I think is a very interesting one. We're very fortunate to have four very learned gentlemen with us who each have quite a unique perspective and insight into the consumer market. I'll allow them in a second to each introduce themselves so you have a good idea of where they come from. But by way of introduction, where my interest lies in the consumer market, I'm the managing director of Intrepid HR. We're a search firm based in Johannesburg and Cape Town, but we really work the Pan-African market. Now, we are mostly investment banking, private equity, asset management, the financial markets. But our clients, through their activities and participation in the consumer market, which has been a high-growth sector, we get very involved. So, for example, private equity firms, when they invest into consumer business, will come to us and say, now we've made this investment, we need to make this business achieve its potential. And that requires people, which is why for 5 years in a row we've come to Wharton. We do work with other business schools too. Began bringing talent back to Africa as a fundamental part of enabling this whole success story. So we do financial directors, CFOs, leadership development programs in businesses. So we give a good insight into what's happening. We do see it top down. So I'm looking forward today to chatting to you gentlemen. They can teach us a thing or two, I'm sure. We'll have a couple of questions and answers really on the panel. But really what we're looking for, there's 60 or 80 of you out there. And I'm sure a lot going on in your minds. And I think this is the right opportunity to pose your questions, and let's see if we can figure out the shape of the future. Great. So, Chiefy, do you want to start introducing yourself?
Sure. Good morning, everyone. My name is Papawasa Chiefy Indom. I am an attorney and vice president and general counsel of Group Indom. And we're a diversified business group primarily operating in Ghana. We're in the hospitality, financial services, media, real estate, and industry sectors in Ghana. I went to Penn for undergrad, so I know this area very well. And in terms of consumer businesses, we've done a lot of work trying to figure out how to expand a number of businesses that were started from scratch in Ghana and also move them into the sub-region in Liberia, Togo. We also operate in the U.S., and have been thinking about consumer businesses from that perspective as well, involving diasporas and returnees. One of the things of note, I recently did my transition after working in corporate America back to Ghana, where I am full-time. So for those of you interested in that dynamic, I have a lot to say in that area, in that regard. Thank you.
Hi, can you hear me? My name is Saf Yebo Amankwa. I'm also Ghanaian. Happenstance. I am a senior partner McKinsey & Company in Africa. I'm the managing partner for the South Africa practice. And my relevance or background into this topic of consumer is that I serve 4 institutions that do spend a lot of time serving the consumer in Africa. So I work with one of the biggest telephone companies in Africa across 10 different African countries where we do a lot of work on pricing and consumer services. I also work with one of the biggest banks across Africa where we do a lot of the work helping to think about the African consumer and how you think about debt and pricing and products and services. I also do quite a lot of work with a distiller, a beer company, beer and wine company that services primarily Southern Africa. And so we spend a lot of time, again, thinking about what does the African consumer want, what do they want that is different from other markets. And then finally, I've spent the last year doing a very big restructuring for an old British logistics and retail company that has assets in Ghana, in Kenya, in South Africa, Mozambique, Namibia. And so I've had the privilege of looking at that market. It's mostly a fresh foods and fish business, transporting it across all of Africa. So that's my background in terms of consumer. I think additionally, we at McKinsey published a report or did a report on the African consumer about a year or two ago, both in terms of what the African consumer is interested in and how they're buying and what they're spending money on, and then also how they're thinking about online. So can I also talk about that?
Hi, my name is Alden. I'm a New Yorker, and I'm operating Subway in both Tanzania and Kenya. My partner is CJ Bach. He went to Wharton and actually ran the African conference when he was here a couple of years ago. So we started in Tanzania, now we're opening stores in Kenya. Our sort of goal for our company is not only to operate Subways, but to sort of be a go-to for American brands that want to enter the market. It's it's interesting for us because it's really direct contact with the consumer, and so we're getting to learn about relative to American consumers, do they go for a 6-inch or a foot long? There's all the supply chain issues, the personnel issues, and a lot of dynamics about trying to operate at a global standard in an environment that, often for a lot of reasons operates at a lower standard. So it's a really good insight into the consumer, and I'm looking forward to talking about it.
Good morning. My name is Frankie Du. I'm also Ghanaian. I'm a banker by profession. I've been in that field for 25 years. So I guess I qualify to sit here because as a banker, I operate in all the various sectors, trade, finance, manufacturing, name it, consumerism. Thank you very much.
Great. Okay, so we're quite fortunate. We have an investor, a strategist, an operator, and a banker. So I think we pretty much have the opportunity to look at each of these questions from a different angle and understand how we can put this all together. One of the biggest questions I'm faced with coming to Wharton regularly is most of you come from multinational backgrounds after quality undergraduate studies, you do an MBA, and you left, by the time you're in your second year, you were all thinking, how do I use my MBA to escalate my career, or am I ready to be an entrepreneur? And one of the most frequent ambitions I find in people, even if there is a next step in a corporate career, is one day how to own my own business. And I think sitting in the USA, educated in the USA, and having the aspiration to set up a business in Africa, and given the low amount of verifiable consumer information, it is a really tough decision to take that plunge. So I want to start with Chiefy on the far side. You've obviously lived in the US, worked here, and have joined a very successful business back in Africa. From a operating perspective, how have you found the transition back into finding value in businesses and making business decisions? How has it been different, in particular related to consumer markets?
Okay, thank you. That's an interesting question and relates to the point that you brought up about how people educated in this environment think about starting businesses in our part of the world. And one of the first things I noticed, and one of the first things I say about that is it's extremely important to get a lot of experience working for someone else in this environment, particularly if you come from a background where you've been educated and worked different cultural, different standards, different issues, things here in terms of business practice. I was a corporate attorney. So even though you have creative issues you have to address, it's a very structured environment. In the businesses we do, where you're dealing directly with consumers who have immediate demands, you can't just follow a set procedure to solve problems. So it's very, very important to get good experience working for someone who has a clear business objective, and also learn how to address those unexpected challenges that you'll face when you do business, in my case in Ghana and a few other countries. So one of the key things that is also important is to remember also your training and your skills. When you enter an environment where you know you have a defined skill set, but it may not apply verbatim to what you're doing, if you have the confidence that you actually know how to address the issues on a very high level, it's easy to come up with creative solutions and propose them. So in my case as a lawyer, in all of our various businesses, the key thing is to understand the need, understand the environment, and then you look to your skill set to find how you can leverage that. So whether it's raising new funds, using research skills to ensure you've got the right training materials. Because in every, I think across all industries, primarily in West Africa where we are, you have to have a very strong operational mindset and people mindset. So it's a process of figuring out, at least in my experience, how to match those two in order to meet your objectives.
Okay, thanks. We'll work along. Saf, from a McKinsey perspective, I was listening to the clients that you service, and they vary from between local businesses looking to expand across the region and multinationals obviously trying to figure out their entry point. Is there, from a consumer market perspective, are there any sort of broadly key factors that McKinsey have identified or factors that you've consulted on and observed within your clients? If you had to create a checklist of the three key things you need to be aware of, what would they be?
Sure. But before that, you say that, can I just comment on this
sure.
answer? So I was also in the United States with McKinsey for 17 years before I moved to Johannesburg about 4 years ago. And one of the things that I would say, though, that is in terms of being an entrepreneur in Africa, there's obviously many more opportunities in Africa in terms of entrepreneurship in all aspects versus the United States, but it's harder. And I always say to people who come to talk to me about, especially McKinsey people who feel the energy in their gut, I want to go start something. If they've not have a track record of being successful in the United States, being an entrepreneur, I really am worried about them going to Africa to be an entrepreneur. So just a byproduct. In terms of what does it really take to win in consumer in Africa, I think there are 2 or 3 things that we spend a lot of time with our clients on. The first is supply chain and logistics. It is unbelievably expensive and difficult to get products to different parts of Africa on time, with the right quality, and so on and so forth. We actually think about it as an opportunity rather than as a problem. I mean, getting things through the port in Nigeria is an art form in itself, and or in Angola or in Kenya is actually not that bad, but finding it's a huge competitive advantage to be able to have a functioning logistics and supply chain in Africa, especially if you want to play across Africa. That's number one thing we work on. Second is commercial skills and capabilities, right? How do you price? How do you think about merchandising? How do you think about reverse logistics? I have a client that is selling mobile phones across Africa. One of the biggest issues is reverse logistics. What happens if something goes bad and you need to get it repaired? How do you think about branding when sort of advertising channels are not, radio is still the best, but people are trying to use a different advertising. So the whole commercial function is something that we spend a lot of time on. And to the point I think we'll talk about later, obviously, skills and capabilities and talent is always an issue to drive good customer experience. I think we've changed our mind a lot, by the way, over the last 4 or 5 years of working in Africa as McKinsey. We used to be very focused on trying to bring in talent from overseas, and we've come to the conclusion that actually is much more expensive and more difficult to do. And so we're spending a lot of time with our clients creating talent engines within themselves or within Africa where they can bring people, train them, so that they can actually participate, help them in their RHA businesses, especially in consumer.
Okay, very interesting. So it's good that there's a switch towards developing skills on the ground. Excellent. Okay, Alden. As the man on the ground, living the experience, having taken that big step, we touched on a few of the factors here: supply chain, people, commercial pricing. One of the key aspects that I would like to understand, particularly about your experience, is pricing of products within a U.S. context, where Subway sits, the product, the value you get. Where does your pricing sit relative to the local market for your products, and how much of a factor is that in determining your success?
Okay, relative to the U.S., it's about the same cost, but I think pricing strategy is so important for any business. Our competitor KFC made a big mistake when they came into both Tanzania and into Kenya with their pricing. They priced too high, and there's a lot of pressure. For example, Subway, of the couple of hundred countries it's operating in, we have the highest chicken cost on the planet. And so a lot of people either want to raise the prices or dumb down the product, both of which we fought back very hard against. And I think on a pricing strategy, to really get down to the micro, I think it's important that you have a spectrum across the board where you have entry-level prices, where you can broaden your consumer base, and also you have consumers who really don't care whether the sandwich is $5 or $10. So I think it's important to keep in mind on the micro of a pricing strategy that you want to have very broad appeal, and to be careful not to price yourself in a way where you don't build on a local thing. It's funny, when we had our grand opening sale, one of the employees from the service station came in and she bought a sub, and she said, oh, no, please don't put it in a bag. I don't want people to think I'm so wealthy that I'm buying your product. I'm going to just sort of take it out in my pocket. So, there's I think a perception that Western brands operating in an African environment will be very expensive. I don't think that has to be, and I think if you can offer a value, you can do very well. If in fact you could deliver like a McDonald's dollar meal, you would feed the entire continent. So it's sort of balancing out your own margin and figuring out who you want to service. So, in short, I think pricing strategy is absolutely key.
Okay, thanks, Alden. Right, Frank, so as the banker who sits with all the funding to enable all of this, and having to make very key decisions about building your client base and taking risk. Given the relatively low visibility of financial controls in businesses, particularly the high growth sector, very cash flow, cash-based, I mean, how do you go about it as a banker to find a ways to secure your loans and decide who to lend to at what price? Are there any particular challenges that are consistent?
Thank you. Thank you very much. Banking in Africa. I'm not sure that it's an art, skill, or a science, but we try. The business space in Africa, or let me talk about Ghana for instance, or in particular. There's a lot of informal activity, informal economic activity, informal sector activity, and they all need financing. They don't have books, they don't have audited accounts, they definitely do not have supply chain management and logistics. But they form 70% of the economy, and if you want to grow, you've got to lend to these people. So we find ways, but lately, since 2008, and the crisis and meltdown in Europe and the Americas, and the imposition of so-called Basel II, and now we are going to Basel III, we are forced to follow more formalized ways of lending to these sectors. So we've introduced credit bureau systems like you have in the West. Central banks have gotten more detailed in their regulation and regulating the banks and insisting that you get security, etc. The collateral registries have been set up. What happens then is that the majority of the informal sector businessmen are not able then to access financing from the banks. So you have had in Ghana a proliferation of what is called non-bank financial institutions. And as we speak, there probably are about 250 of them. Maybe 5 of them collapse every day, and 10 more are licensed every day. Some run away with people's depositors' funds. They charge very high rates of deposits and lend at they offer high rates for deposits and charge very high lending rates. What, as a bank, Cal Bank, what we've done is we also have in Ghana about 237 what is called community banks. These banks are banks that nobody can control. It's owned by the communities. They probably will have, say, 100,000, 50,000 shareholders each. Everybody probably paid $10 to be a shareholder. These are the people who live in the districts, and so for us to be able to access those markets, we make lines of credits up to about, say, $2-3 billion to these community banks, who then go and make the $500 or $1,000 loans. And interestingly, it is the customers of these community banks who produce all the cocoa that Ghana exports. Okay, so 2014, we raised $1.7 billion as a first ceiling. We could go up to $1.95 billion for the purposes of buying cocoa from these farmers. And the average size of a cocoa farm in Ghana is 1 acre. And they all borrow from these community banks. So it's all three. It's an art, it's a science, and definitely you must have some skills. And you must be able to innovate. You must not necessarily be fixed in the ways you do things. Now, Chiefy's group, the GN group, has recently ventured into the banking sector. And they have targeted the low end of the market, right? Making very, very small micro loans, and I think the jury is out on that because all the formalized banks who have tried that in the past have suffered greatly. Before the program started, I was talking to John Simon, whom I've known for a very long time, and he was talking about making, what's the group's name? Some group, Medi something, making, one of my directors is here to make sure that I behave. Making $5,000 loans to companies in Africa. And I said to him, if you're doing these loans through banks without security, then almost all the loans will go bad. The big ones won't go bad. They make from $5,000 to $500,000. Now, the default rate in the $5,000 category was 86%. Okay. Now, if they had, however, gone through the community bank or rural bank system, the default rates would probably have been 5%. Because that operates on the basis of, I gave Lisbeth a loan. Lisbeth hasn't paid. If Lisbeth hasn't paid, Lisbeth can't go to church on Sunday. She can't go to market on the market day. She can't go to a funeral when there's a funeral, and that's big in those areas. So Lisbeth, cultural and community pressure, nobody says anything to her. We'll go find the money and come and pay. But if you go through Cal Bank to make that loan, then Lisbeth is not going to pay, and she's actually going to get support if she doesn't pay. Thank you.
Okay, thanks, Frank.
I would like to talk a little bit about just as our strategy on this side, because I think it's good to see two sides of the consumer story, from the traditional banks like Cal Bank that have done extremely well in the more formalized sector, and us with GN Bank. We recently got our banking license, and it started as a savings and loan in 2007. And the mission of this bank is to be the people's bank. So we focus on the everyday consumer. And the core of our strategy actually right now is to focus on some of the elements that people have touched on, because the vast majority of commerce in Ghana in particular is informal. Only about 15 to 20% of consumers shop in supermarkets. Most people are still going to their huge open markets on a weekly basis to do their shopping. And one of the key services that we provide is we have about 700 people, we call them mobile bankers, and we give them a POS device or an Android smartphone, and they go out into the markets and they collect money, cash from people on a daily basis. And this service is actually a form of, is business infrastructure, because if you're running an informal business, you sell rice, for example, you sell it in the market every day, you see your mobile banker, you take your cash, they deposit it, you get a text message receipt along with a physical paper receipt, and that serves as people's store of working capital. Some of them deposit the money on a weekly basis and withdraw when they need to do their restocking. But the core for financial services in Ghana, from our perspective, is really focusing on ensuring that we have a savings culture. And the issue with the rural banks and microfinance institutions who do raise deposits at very high rates is an issue, a systemic issue that we have. And our focus, however, has been on providing money services. So understanding your customer, knowing that even though in the US, bank branches are closing every 5 minutes and people are saying they don't want checks, they want to do internet banking, we instead give technology to individuals who can explain to a customer how to use the service, what the benefits are, and can also focus them on, particularly for vulnerable, small micro businesses, savings, so that they do get some interest and they have regular access to their money whenever they need it. And that access is actually through a physical person who you can call, who comes to you, gives you the money to do your business. So it's what we think is a new business model for banking. Now that we have the universal banking license, we can do things that we didn't do before, but the core of it and what I believe will drive the business going forward is this human, personal, technology-enabled business, and it's for a lot of reasons. People have talked a lot about the logistics challenges in doing business in our environment, and they are gargantuan. If you do any business that operates in all the regions, you have to provide generators, you have to provide water. We are ensuring that we have toilets in all of our facilities that are clean and available for customer use all around the country. These are types of infrastructure that you don't think about here. But the one key point about this story of the consumer is very important, is on this mission of reaching people who are not in the financial system, people who don't have the infrastructure to either run their own business or be an effective consumer. A lot of, in your field, a lot of people talk a lot about the rise of mobile money and how the cell phone is enabling consumers to do things with money that they couldn't do before. But from our side, we think there's a significant gap because the infrastructure to put the money in the system doesn't exist. Because there aren't places, there are many, many communities where you go there and the people will ask you to bring them a financial institution, not for a loan, simply because they want a safe place to put their cash, where they know that the person's not going to go away. And most of those consumers aren't very, as opposed to the high-end consumers, they don't press as much for high interest rates. What they really want is friendly customer service. Someone who will talk to them, fill out their forms for them at the branch, deliver the money to them where they need it. And we operate in a lot of sectors, and the key thing running through a lot of those businesses is that aspect. Despite the challenges in hotels, for example, when people talked about pricing, I was laughing inside for a minute because between the U.S. and Ghana, we have a hotel in Accra, and we charge what we think is a very, very reasonable rate, an average rate of around $100 a night. Now, for an American consumer, you can go to a hotel, and for $100, you can get a lot more than you can get in Ghana, because you don't have to have a huge generator running. You don't have to have a fleet of 17 cars for your procurement of your food. The water provision is regular. You don't have to have tankers coming in every couple of weeks. And because of those challenges, we could say, okay, we'll raise our pricing, but then we'd lose our tier in the mid-market. So the way to bridge the gap is to ensure that you're providing very, very excellent customer service, so that if you do say, there's a problem, you say it with a smile, you make the customer happy and want to come and do repeat business regardless of the challenges you face.
Great, thanks, Chiefy. Saf, just on that, I have read your survey from a couple of years back, the consumer survey, and it obviously covered really all the key touch points. But 2 years on, has there been much involvement of those thoughts? Any particular areas, new trends? Because 2 years is actually a very short period of time in actual time, but in the growth of the market has been quite significant since then.
Yeah. I think, the report that we did talked about a lot of things. Let me just mention 2 or 3 things that surprised me, and then things that I've learned as I'm doing my client work that stand out. The 2 things that really stood out for me in the work that we did was the attitude of African consumers, especially African female consumers, in the retail space or retail apparel space. One of the things that we did not expect is the preference, especially in West Africa, of African female consumers for local brands. That was very surprising. It wasn't so much in North Africa, but in Southern Africa, but in East and West Africa, the huge preference for local brands was surprising. By the way, when you dig underneath it, one of the main reason was continuity of supply, or understanding of needs. And by the way, it turns out this is not just a consumer female thing, it's actually an African thing. When you go in, even in the B2B space, when you talk to businesses who buy technology, one of the biggest drivers of purchase is actually continuity of supply rather than necessarily innovation or capability. That was surprising to us. I mean, we felt it in our gut, but we didn't realize it was so strong, right? So the African women prefer, especially West African women, prefer to buy clothes, even if it's 20% or 30% more expensive from their local tailor than to buy a European brand. That shocked us. Second thing that surprised us that we continue to find is the role that the internet is starting to play on the African consumer research and decision making for high involvement purchases. We especially the urban African consumer, obviously, and that surprised us a bit because we thought that was, I think the general feeling was that the internet is not that pervasive. It actually turns out in the urban markets, internet is very pervasive, and young Africans especially use it to make a lot of decisions about their purchases, both physical purchases but also services. And that trend actually, I'm just doing some work right now for my mobile phone company client, and we're looking at the e-commerce opportunity, and that trend actually has accelerated. I think if somebody mentioned in the plenary that if you fast forward, 10, 15 years from now, more than 60 to 70% of the GDP in Africa is going to be in 40 or 50 cities, right? And the retail infrastructure to service those Africans is horrible, right? I mean, I think, in a city like Lagos, I mean, I think it only has like 0.1% of the retail space it needs relative to the consumer market, and therefore the internet is going to play a very big role in terms of servicing those consumer needs. And what we're finding is that in terms of both research and decision making, that is going to be a much more important channel than what we actually suspected. The last thing I'll say is that it is interesting. I have one of these hobby horses, things that that trigger anger in me, which is whenever it used to happen a lot more 10 years ago than it does now. or whenever Africans got together on conferences like this and talked, it was always very interesting that you never, so I used to do a lot of work in Asia when I was at McKinsey in North America, and you go to investment conferences and so on and so forth. People in those conferences never bring the issue of government and societal improvement into the conversation about business. But in Africa, but Africans, when we ever get together and talk, it's all very intermingled. And it always used to bother me. I didn't understand. I'm obviously a very big capitalist. So I never understood why the issue of social. I mean, I understand that both things are very important. But when we're talking about money, we're talking about money. And when we're talking about lives and we're talking, it's a different conversation. I think it's changed a lot more. And one of the things that's really changed is that because there's so much business going on in these cities, the issues that we've talked about before, like getting things through customs, has actually improved a ton. It is actually quite, we do a lot of analysis on the effective cost of supply chain in different African cities as we prioritize cities for our clients. And what I'd say is that, I just did this for another client last month, and one of the things that's really surprised me over the last 2 years is how much the effective cost for getting goods into African cities has come down.
Sure. Thanks, Eldon. I mean, obviously, one of the last 5 years, big developments around the retail is shopping centers. Very new to Africa. I mean, where are your subways based? Do you base them in the shopping centers where you got walk by trade, or how do you use that phenomenon to your advantage?
That's sort of interesting for me because we've been fortunate to end up with all of your basic categories. Non-traditional, which would be service stations. We're in enclosed malls, and we're also in city centers. So we've done a fair amount of our own research in how the consumers are different between malls, which are sort of more expat-oriented, service stations, which are sort of serve a suburban type of client, and city centers where you have the huge foot traffic. And what I thought was interesting is that it's less different than you would think. So our consumers across all of our locations seem to want the same thing, and it's not just value. I also think there's a real desire for an experience. So if you're going to make an offering and from an entrepreneurial perspective, I think it's important that you deliver an experience to the consumer that can be a little different. We're bringing Western brands there. So I think it's not necessarily that the food is that different. It's the environment within the store itself. If you can give the consumer an experience, I think that's really going to bode well for your business.
Okay, thanks. And I mean, moving into new markets, I mean, you mentioned that you're looking at going into new countries. How much research is there available, and how much have you had to, draw your own conclusions?
We've done a lot of our own surveying, so what we've discovered is sort of proprietary, and I've always found it very interesting. And we've got a foothold. I think if you're going to go and start a business, you have to go. It's an interesting. When CJ and I first showed up in Tanzania, everybody thought we would go out of business quickly. It's an environment that's full of a lot of people that come with bright ideas and dreams. And fall short. So if you're going to go and try to start an entrepreneurial business, I think you have to have a real sense of determination, adequate capitalization, and I would, what we've done is supported by big corporations behind us. Throughout the entire subway system, we have more of our employees taking the training that Subway offers. And so, it's interesting, it's not really the consumer, but it's the employee. They are so interested to learn and avail themselves of whatever training tools you have. It's exciting to see the actual amount the employees want to sort of engage and understand the business and learn themselves. So that's been very fulfilling for CJ and I to bring our employees along with us And we're really driving to a day where we'll be able to sell franchises to, people, local people. And there's a lot of barriers to that because the supply chain now is so complicated that domestically anybody can open a Subway. You need a few tens of thousands of dollars and just a basic business skills. The barrier is so much higher in Africa. But as the supply chain improves, the breadth of people who will be able to own their own stores down the road, and that's what really makes the opportunity exciting.
Interesting. Frank, so correct me if I'm wrong, but I understand that CalBank is what, number 4th or 5th or 6th biggest bank in Ghana. Big institutions, government-backed, that you compete against. Where do you guys find competitive advantage to break into that market?
Good question. Understand, Ghana, like most African countries, have the Barclays and the Standards, etc., Standard Chartered, etc., and lately Standard Bank of South Africa, etc. But CalBank is a purely local bank, okay, and so we've had to basically punch above our weight. So there are 28 banks. We are maybe 8th in total assets, but 5th in profitability, which surprises everybody. Now, where and how are we able to do that? We have a very, very flat structure, and we focus a lot on customer service. But the other thing that I found out in the years that I've been CEO is that it's not the capital, it's not the resources, the fiscal resources, etc., that matter. It's the people. Because it dawned on me very quickly that whatever the situation was, it was some individual making a decision for you. Now that person, you could give $1 million or $100 million or $10,000. If he's an idiot, he's an idiot. He's going to lose it. If he's smart, he's going to make it. So now what I did was to focus purely on people. And so one afternoon, after lunch, and I always go home for lunch. So after lunch, we weren't making a lot of money. And I said, you got to do something. So I went to the office, and I called my head of HR, and I gave him a list of 5 people, basically from number 4 down to number 9. I said, call each one for me. So the person comes and says, you're fired. What did you do? What did I do wrong? You did nothing wrong. We're a parting company. In 15 minutes, I removed 5 people in 15 minutes. And I was prepared to go to court to fight, how do they call it? Illegal something. They can sue you under the labor law. And then I started all over again. And this has nothing to do with anybody here who's over 50. I'm over 50. But I decided I was going to work with only young people like you. I made a decision that afternoon. I'm going to work with only young people. No more 50-plus people. I left 250-plus people. One of whom is today the CEO of Group Indo. And I don't know. Yeah. And so I now focused on people, recruiting smart people, and training them. And that made the difference for me. I'm telling you, these guys, they work. I mean, they do their work, and I take the credit. Which is the way it's supposed to be. You pay your dues, and you also get there. And then somebody will work for you to take the credit, really. So I've invested in a resource center, which bets, I think, 30 people. And there's year-round training. Every day there's training. We have a graduate training program. And when you qualify for it, it takes a year. We actually put you through training for a year. The last one, 2,000 people applied. Went down to 50, then held interviews. I sat in the interviews, presentations, cut them down to 40. After 1 year, 10 will not survive. And that I think is what has made the difference, because we have shown, we've basically doubled profitability year on year for the past 5 years. Yeah. That's I think is what, so for me, the people, I think the people is, and if you want to be an entrepreneur, you should focus on that. You know, you have to get the right people. I've made some really terrible recruitments, but I think that we've also made some very smart recruitments. Yeah.
Okay. Chiefy, as an investor in Africa, Catherine, we have one more round of questions. As an investor with such a diverse portfolio, I mean, where do you go to next? Is your business opportunity driven, or are there particular sectors or consumer product areas you feel are underdeveloped or underexplored? Without giving away too much of your business plan, of course.
Okay, well, first let me clarify. I'm actually just an employee, so the investors are sitting somewhere else. I'm speaking on their behalf. But in terms of the search for new ideas, you know, and one of the things I wanted to mention to everybody as they think about, or you know, those who are interested thinking about coming back, doing work, was don't come back empty-handed. In the sense that if you can show up and add value, not just in terms of ideas, but also in terms of fundraising. Because one of the key things that we need is patient capital to drive a number of the businesses that, and this gets to our mission in terms of how to find opportunities that won't necessarily deliver an immediate return in terms of profit. One thing I'm very happy to announce in this sector, our group, we just signed a transaction to raise $9 million from the Soros Economic Development Fund. And that money is all going to financial inclusion. It took us a lot of work over many years to find the right partner that would be interested in what we want to do, which doesn't necessarily give a huge return. It takes a lot of hard work. A lot of capital needs to be deployed. And you have to train, you have to recruit hundreds, thousands of people. We're now at 1,500 employees at GN Bank and growing fast. So the people management part of that is very, very tough. But the reason why we've spent so much time and why I, personally as a lawyer, and my brother is a finance person, we spend a lot of time thinking about in various areas. We've done a transaction where we raised funds in Liberia. This is our first one in Ghana with outside development finance institution, is because you look at these opportunities and you say, you know, you don't have to be so innovative. Sometimes it's just a no-brainer, right? You know, when you walk around here, if someone told you, let me take away your checkbook and I'll take away your internet banking and I'll take away the bank branch and I'll give you a cell phone and have fun banking, you know, would you like it? Probably not, right? You'd say, I would like all of these comforts that I'm used to. And so in many areas, we look at an opportunity where there's something that's just missing, right? People don't have a comfortable, cost-effective place to stay, which serves good local food, warm, friendly environment. We do it. You know, with our beach resort, we were in 20 years ago, my parents saw a piece of land that was being used as a refuse dump. They invested in it, and now it's a very well-renowned beach resort. So in terms of selecting where to go next, you know, we see a lot of business proposals with very, very exciting ideas based on analytics, based on new mobile technology, you know, and they're exciting. But the real fundamental missing links are very, very basic. You know, people can't get things to certain places in good time. People just don't have a decent money service. So, you know, in terms of what's next for us, I mean, we have a model now that's been, we're starting to talk about it. For a long time, we didn't mention, for competitive reasons, what we were doing in terms of expanding out into the country, reaching lots of people. But now it's out. We're a universal bank, and this is what we're doing. We're going after the everyday people and trying to ensure that as many of them as possible. In Ghana, we have about 66% of the eligible banking population doesn't have a bank account. So, and getting to those people is expensive, and they're not going to have very high balances. And from many perspectives, it's difficult from a business standpoint because in each case, like for example, take a technology service provider. They don't care whether your customers have 50 CDs or $1 million in each account. They want to charge you for each account that you use on your platform. So there are a number of things you have to try and innovate around and adjust in order to make the models work. But the key thing here is, we do a lot of research. If you go out and you just read, McKinsey's put out great reports, lots of people put out great reports with excellent research, going some tapes in very, very in-depth in terms of how people actually use products like mobile money, how they save their funds, what they want to spend on. But the challenge is actually operationalizing it. And that takes a lot of discipline and sacrifice. And so for the people who are here, if you're considering coming back and trying to go, or coming back or leaving, let's say you're just an American or from somewhere else and you want an exciting opportunity, I would say you should look at places like Ghana, Nigeria, Sub-Saharan Africa. But when you try and address those opportunities, make sure they're simple. Make sure that you're willing to sacrifice. You won't get paid as much as you'll get paid elsewhere if you want to address the hard challenges. And that's where that point about not coming with empty pockets comes in. You should have an idea of, if I'm addressing a challenge that's going to take 10 years to solve, because some of the things that we're looking at, they're not really going to get to the point we want them to get to 5, 10 years. How am I going to raise the funds, and how am I going to have the shoestring budget to dedicate myself to making that happen?
If I may, just to add on to what Chief has said, I think the other thing is not to fall in the trap where you think of Africa as one country and the people have equal behavioral partners. When we think of Africa as one market, yes, we should. But you must understand that the 54 countries have 54 different behavioral patterns and peculiarities. I remember when we were doing a capital raising exercise, some investors came to my office and insisted that we should follow the equity bank model. And I said, I'll tell them a story. Western Union, money transfer, etc. When I was sitting in my office and a friend of mine from Banjul, the Gambia, came and said, he wants to take me to the governor of the Central Bank of Gambia. I said, why? He says, because he can get me a license in 24 hours. And I said, but why don't you want to take it? He says, I don't want a banking license. But this gentleman had a money transfer service. And in Gambia, when somebody receives $100, he goes and says, can you keep $80 for me? I'll take only 20. By the time he realized, he had 10,000 such customers. And he was holding more dollars than all the other banks in Nigeria put together. Now, in Ghana, when somebody receives $100, he comes and he says, can you give me $120? Okay? So the behavioral patterns were completely different. So when this gentleman came and says, we can do equity bank, we can turn car bank into equity bank, I said, you have to be very, very careful. Because 10 years ago, we had taken Fundamo, who wrote the mobile money software for MTN in South Africa, to Ghana. 2-3 years on, nothing was happening. 5 years later, mobile money, now MTN itself takes it up. And slowly it's building up, okay? So you cannot say, because when people see M-Pesa and Equity Bank today, and they think it started just yesterday. But like as Chief is saying, it's been a very long grind, But the critical thing is, do not listen to us and think Africa is flat, because Africa is not flat. Africa has great opportunities, but Africa has distinct peculiarities country per country. Between Ghana and Cotonou, which is Ghana, Ghana, Togo, Nigeria, and Cotonou, 4 countries. It is shorter to get to Cotonou from Accra than it is to get from Accra to Kumasi, which is within Ghana, okay, by distance. But it takes, we went to set up a bank in Cotonou, so I had to go there 6 times a year. It took me 7 hours to travel just about 200 kilometers to Cotonou anytime I was going there because of the various difficulties and peculiarities. But I also say that, you know, Africa is a great place, and I think you have more opportunity of becoming very wealthy if you went back home than you have staying in America. Trust me.
How is the market different for a guy on the ground?
So let me just allay a myth, one myth, which is the McKinsey in Africa serves multinationals. In fact, 95% of our work is actually for African companies. In fact, most of our partners and associates do not like serving multinationals. I mean, American or European multinationals. And so we've pivoted. You know, we have about 400 people serving clients in Africa, and 95% of what we do is for African companies. So I think there is, in terms of entrepreneurs going to Africa, I think there's 2 things that I would say. I think the first thing I would say is what I said earlier, which is actually very difficult to be successful. You know, there's a problem in Africa of these what I call positive bias stories, right? Everybody never talks about the 100 people that failed. Everybody talks about the one that, you know, got away, right? And succeeded. And so you got to just be very careful. If you can't be, it is so easy to be an entrepreneur in the United States. You know, your credit gets cleaned up after 7 years. People actually celebrate failure. You know, access to capital is actually very, very easy. You know, you get credit card things all the time. You can start a business on a credit card. Versus in most African countries where it is actually super, super, super hard, right, just to get going. So if you're not an entrepreneur here, please be very careful about leaving your banking job to be an entrepreneur in Africa. That's number 1. Number 2, I actually think there's 2 types of entrepreneurship. And then the second is not talked about or driven hard enough, both by people wanting to go home and also by the companies in Africa. And this is something that we're working a lot with in our clients, which is there is not a big culture of people getting equity instead of cash compensation, right? And in my mind, especially where Africa is and where a lot of these companies are, most people can be entrepreneurial by taking equity or forcing their income to be more equity than cash. Because then you're participating, you're being an entrepreneur, and you're actually an owner of something that is going to be much, much bigger. We all know it's going to be much, much bigger if it succeeds 20 years from now, but the effective risk is much less. And this is something where one of the things that we're spending a lot of time on advising our clients on, that they really need to start embracing much more of a mindset of, you know, compensating with equity, because a lot of Africans, it's very difficult to move, or entrepreneurs to move to Africa, especially if the upside is not compelling, right? Because the cash comp, the working capital, the cash comp is never going to be high enough. But for some reason, it's very difficult for both especially the African companies to create capital schemes or equity schemes. Part of it is, you know, very, very jealous owners who have been entrepreneurs themselves and therefore don't necessarily feel like it's right to share with the next generation. Part of it is the capital markets themselves are not liquid, or that, you know, it's not clear what the exit really is going to be, and therefore it's hard to structure. Part of it is that the infrastructure to actually set these things up do not exist. But I actually think those are all things that can be solved, especially if people's mindsets can be pulled together. So, you know, I actually like that entrepreneurship part B much better than the entrepreneurship part A. Because I think a lot of the skills here that people could bring home are much more about accelerating things that are nascent rather than necessarily going to create new things.
Okay, great, thank you. And maybe a last question before we take questions from the floor. Something I want to ask Alden, given a guy with a great track record in the retail space and investing in growing small and medium-sized businesses, I mean, I've noticed just really in the last year or two, African products appearing on the international market. I mean, do you see an opportunity in that? Would it be very difficult for an African entrepreneur on the ground to get their products into the international market?
Wow, that's a hard question because it's not really within my experience. I know that there are not many African brands that you see in the United States market. So the flow in that direction to date, I don't think has been very robust. But maybe because of that, you know, that's an incredible opportunity for someone who can figure out how to make something in Africa and bring it back to the States, and you know, sort of like a reverse would be, in my context, bringing a Java hut back here. There's been a little of that, but I don't think it's been very robust. And I would just add, I completely agree with my two fellow panelists. You know, if you're going to go there, you know, make sure you do have something in your pocket, because I mean, it's almost sort of a joke, the number of people that fall short, and also, you know, that you have the experience in entrepreneurship to be successful. But with that said, I think there are so many really wonderful opportunities, and I, you know, that's been a little bit my experience. If you can get over a certain level of scale, you have opportunities that you don't have in the States. It's just, you know, in the quick serve business, their stores are beginning to close. It's a saturated market. And I think that's why you see now all these international brands trying to crowd in at the same time, because they know that their American and their European growth has really come to an end. And so they're looking around, where is the next growth coming from? And Africa, I think, offers a hugely unique opportunity for people to do very, very well. But the challenges of getting into a position to realize that opportunity are also very real and very big.
Can I just comment? You know, I think that, yes, we're talking about entrepreneurship and consumerism, but it's not all of you who are going to become businessmen and businesswomen. And Africa still needs your skills, you know. And if you take, and then you talk about equity, I agree with you. You know, Barclays Bank, the Articles of Incorporation of Barclays said that at any point in time, there must be a Barclay in top executive management. Then it changed as the quality of the Barclay became more and more diluted with procreation. It changed and became, there must be a Barclay on the board. Now, since the past 10 years, there is no Barclay on the board, okay? So it's a process. I remember I nearly got fired at an EGM. My first AGM as a publicly listed company, 27,000 shareholders. My directors, led by Mr. Pryor here, had convinced us that we should do an ESOP. So they gave staff equity. Being the CEO, obviously, I got the most. The first AGM, there was a riot. You know, there was a riot. We had to suspend that program. It was amazing. Then that was 2005. Then 2007 or 8, we decided that we're going to raise an extra $200 million in equity. Now the existing shareholders says, we are going to dilute them. They actually called an EGM to try and fire me. So again, I mean, you have, as Sap said, people who, what they are holding, they are not prepared to share. But I'll tell you a unique story. I set up a private school. And the first 22 students who came, one of them, the parent, had picked up his three kids from school and says, they said, this new school, let's go check it out. When they got there, the kid says, tomorrow this is where we want to come to. So the parent came up to me and says, my three kids want to come to your school. it means that being kids, if they want to come here, means the product must be good. Okay, for whatever reason, they want to come here. So if you want me to bring them, they make me a shareholder. So I said I agreed, because I'm a businessman. I ended up with 11 shareholders. That was 12 or 15 years ago. And I said, don't talk to me for 10 years. Don't talk to me for 5 years. After 5 years, come and ask me about your equity. But after that 5 years, I will buy you out. And they agreed. So now, we've gone from 11 shareholders down to maybe 6 because I'm buying everybody out. So both sides happen. I think it's more a matter of how you want to go about it, who you meet, and then how you negotiate it, you know. But I don't think, Saf makes a very good point about equity in the business, and I believe in sharing because I don't think that if these guys hadn't given me shares in the bank, I'd be working as hard as I do, you know. So I think it's very important, but the situation, both sides will happen. Thank you.
I told my employees I was going to profit share with them, and they looked at me like I was crazy. And I said, "Oh, we do X this week, and you'll get some of it." And they,
What's the catch? Any questions?
Yes.
Hello everyone. My name is Bonnie. Philadelphia. The question I have is, have you considered tailoring your business strategy to millennials, which is between the ages of 18 and 35, through the use of social media? And if not, we should talk after this.
Oh yeah. I mean, look, you know, I have 3 sons. The last one is actually here. And the first one went to New York University. And then after school, he moved to London. And he opened an account in one of the banks. And then they said he should come to the banking hall. So he calls me in Ghana and says, why must I go to the banking hall? I want to do everything by my phone or my iPad or whatever. 5 years in New York, I never entered the bank. You know? So I went to work and I said, well, the demographics of the country, 40% of the population is below 18. They would get to 18 and above in the next 2-3 years. So I called my strategy team and I says, you know, we cannot continue with brick and mortar. So we have Facebook, but confession, I've never been on that. I don't know how to do Twitter or any of those things. But I know the bank has it, and they deliver a lot of services and information through Instagram. But I know all of them, Instagram, Facebook, Twitter, and LinkedIn. So yes, it's as far as CalBank is concerned, it's a medium that we are using, and we use it to target our markets.
all over it, and really great feedback from my consumers. They love it.
We use it, but it's a bit of there's a dichotomy. I know Ghana quite well. We've been advertising on Facebook for a number of years. We've got about 2.2 million active users on, let's say, Facebook, and a similar amount of active of people active on the internet generally. So it's a very important market, but in terms of our overall population, the World Bank estimates that only about 12% use the internet regularly in Ghana. And of those users, we've talked to a lot of people. If you look at things like YouTube and other new media forms that are marketed towards millennials, in Ghana, because of the current inability to get very good, fast, cheap internet in the home, you see a lot of Monday through Friday usage when people are at work, and about 70%, if you run an ad on Facebook in Ghana, about 70% of those people view them on their mobiles. And so when we interview people, I ask them, how do you use the internet? And most of them are using it on their phone, which is a fine experience, but it is inferior to the full experience you get when you're a millennial in the US or UK and you grow up immersed in the process. So yes, demographically, as Mr. Edu said, about 40% of our population in places like Ghana and throughout sub-Saharan Africa are millennials. There are many, 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 many young people. So we use the tool, but mass media, traditional mass media, in our case, radio, newspaper, television, is probably going to remain dominant just because of the minority of people who have the funds and regular service available to use it. So, for example, at Subway, right, or at KFC in Ghana, they should use it because their consumers in Ghana are hooked on their phones. They're on WhatsApp, they're on Facebook, and it works for those areas where you're dealing with I would say, for our market, high-income consumer. But we've got economies that move at two speeds. We have these little pockets where there's more income, more access to internet. In Accra now, you can actually get very, very fast internet at a good price. But it's very, very recent, past few months. And then you have the rest of the country whereby incomes are quite low, and even for young people, they don't have the benefit of those tools. So we have a lot more investment in infrastructure before we will get to the point where it is here, where you're seeing businesses being completely disrupted by mobile and social media.
One more question.
Hello everyone, my name is Tanya Sukama. I work in market research in Washington, D.C. My question is tailored to Mr. Ndum and Mr. Edi, who's not here. But my question is, can you speak to the availability of capital or access to capital for registered small and medium-scale enterprises in Africa, and also to youth entrepreneurs?
It's limited, and it's a challenge everyone recognizes. For us, one of our goals now is to raise more concessionary funds, so funds at interest rates that are below market, to seed these markets along with grants and guarantees, because as for all of the concerns everyone has mentioned, running an SME in where I know best is in Ghana, from my experience dealing with people, is extremely difficult. Getting through the registration process to get all your paperwork and everything in order, regulatory licensing, logistics. There are many SMEs that have been damaged severely in our country due to exchange rate losses for small businesses that make their money importing any type of equipment. It could be from phones to iPads, generators, because of macroeconomic conditions that they can't control. So they're subject to a lot of risks, and there needs to be more financing, but in order for it to be sustainable, a lot of it has to be done at a concessionary rate to allow these businesses space to grow, make mistakes, and not be constantly harassed by their lenders. So.
Unfortunately, that is all the time we have for questions, but let's give our panelists and our moderator a big round.